From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB. It's great to be here with you and you, Juliet Sally.
You too, Nadine Blaney. And what a good day. I think I dressed in theme today. We've had a bit of a choppy week, haven't we, with that RBA shock decision, Trump's tariffs again coming to light. But today it was a very solid gain on the market. Let's have a look at where the CBO 200 is finishing the session, with the ASX 200, I think, up by some 0.6 or so of a percent, but yeah, you can see there the CBO 200 also up by 0.6%, and the ASX 200 crossing back above its 20-day moving average. And that is despite, of course, the concerns about the 50% tariff on copper coming into effect from August 1.
So the S&P ASX 200 is sitting at 8,589, let's call it that, as we move our way toward the US Open, which incidentally, we do have S&P 500 and NASDAQ E-minis coming under a bit of pressure. So NASDAQ E-minis off by 0.25%, S&P 500 off by 0.25% as well, as we continue to mull the fact that Nvidia is a $4 trillion company.
Absolutely. So that brings us to the themes of the day, the ASX rebound we just went through, and the over $4 trillion, at least briefly, Nvidia during the US session. Now, this is such an extraordinary story. So since 2023, Nvidia's share price has skyrocketed tenfold, catapulting its market value from around $400 billion US dollars to $4 trillion. That is more than $900 billion ahead of Apple.
It's pretty incredible. And I know a guest of ours, and you can go to the call and check it out, Mark Moreland from Value 3, who reckons that Nvidia is still a buy.
Analysts on Wall Street as well saying this is just the beginning of Nvidia's ascent.
Yeah,
we're at the cusp here. It's extraordinary.
Now, this is a story that you all were following very much. I haven't been on air yet today, so I'm not really au fait with this. But what is this about a crypto central bank?
Yeah, so we've had a few conversations. We're going to have more, but this is basically this major update that we've been waiting on called Project Acacia that came through today from the RBA. So a major step towards modernising the way we pay. They've launched fresh trials of stablecoins and central bank digital currencies, or CBDCs. Now, this is going to be a 6-month trial. You've got the likes of Westpac, ANZ, CBA involved, along with Zero Cap. We'll be speaking to John DeWitt about it tomorrow, and Not Centralised, who we're going to be speaking to as well. So the RBA really concentrating here on wholesale uses for a digital currency, having decided there's no economic benefit in an official retail cryptocurrency. And extraordinarily, talking about synergies, this came on the day that Bitcoin breached 112,000 for the first time.
Certainly. So we do have interviews about that up online if you'd like to take a look. But going to old school money holders, money lenders, and there's a look at the banks. So CBA up by 1% to $180.66. The miners also looking good. So when you have those two sectors moving in tandem, that often spells a good day for this local market.
Yeah, absolutely. Boosted by, of course, the iron ore price in Singapore. Let's have a look at tech stocks, though, on the back of what we saw with Nvidia. And they didn't perform as well, but Tech One, they're up by 1%. NextDC, though, down by 1% today.
So let's take a look at some of the top corporate stories before we get to our special guest, Sean Callow. Platinum Asset Management up more than 12%. After UBS retained its neutral rating on the stock but increased its 12-month price target to 53 cents per share.
Imricor Medical Systems, though, heading the other way after the cardiac catheter company indicated regulatory approval for one of its US products is falling behind schedule.
Net Wealth, now this company did fall by about 3.5% to $34 on weaker than expected quarterly net inflows. Citi has cut its price target and forecasts as well on Breville Group. Despite that, its share price rising, sitting at $30.44. And that's interesting, even amidst all these US tariff concerns.
Yeah, Premium had a great session. It's partnering with Bell Financial Group, up 7.5%.
And Artria rising to its highest level since January on gaining a contract for a hospital group in the United States, sitting at 96 cents per share.
And Australian Rare Earths, such a small stock, of course, but earlier it was spiking on an expansion of one of its uranium sites. All right, let's welcome to the COB Sean Callow, Senior FX Analyst at ITC Markets. Sean, great to have you with us. And I just wanted to ask your thoughts, because you've been in the game for a long time. Were you in the camp that was surprised by the RBA? And what's your thoughts on whether the communication or whether there's been a communication misstep?
Yes, good to be with you again, Julia and Nadine. I was very much in that surprise camp. I thought that whatever you think of market pricing doesn't really matter. Either they were going to cut rates or they weren't. But certainly I was really surprised that they didn't place a bit more weight on the external environment, and particularly if you think of the rhetoric that they had in May around the threat of tariffs from the US and the trade wars and all of that. They were very worried about it, and they're playing down their inflation concerns. They said we're very much on track with inflation, and so they were cutting rates then. And my expectation was that they would have not been all that relaxed by what had happened since then in terms of the there's obviously been a pullback some in terms of the tariffs versus the April extremes, but aside from that, it's really still a very negative outlook in terms of global growth. It will weigh on the Australian economy, usually not directly, but mostly through our trading partners. And so I thought that's where they might have been. And also that they've had 2 of the 3 months of the CPI. Do they really need that final month to confirm that they're on track for further easing? So it was certainly a surprise to me. And yes, I do think there's been a communication problem. I don't think they communicate with the markets enough. I know they're not happy about hearing that, but it doesn't always need to be a big stage speech somewhere. They could also occasionally talk to the media. Perhaps they could come on this show, for instance. I'm sure you'd welcome them. I think that's part of the problem. We just had so much silence from them that yes, a bunch of rates traders lost a lot of money, but also the public's just really surprised by it.
You took the words right out of my mouth, Sean. I was saying you could come on AusBiz and just do a quick little interview. Look, Sean, despite that, we did see the Aussie dollar increasing slightly through this session, a little bit of pressure coming through on the US dollar. One would think that with copper in the sights of the US president and with just general surprise over that interest rate decision, that perhaps the Aussie wouldn't have necessarily been performing.
Yeah, so look, it's sort of chopping around a bit. I think you're right to put the spotlight on the US dollar itself, because really, if we think about how we approached this whole year as far as the Trump administration, we did expect a protectionist trade policy. We did expect increases in tariffs of some degree, and that was expected to be a positive for the US dollar in terms of reducing reliance on imports and thereby, as I say, positive for the dollar along with that fiscal boost. So that should support interest rates. So there was that long dollar story, but what we've seen is a big pullback, and the extent of the tariff increases to the point of an expectation that it really damages the domestic economy. I think that's been the surprise, and that's really undermined the US dollar in terms of raising talk of recession, which might have eased off now, but that very much the hot topic through the second quarter. So I think that's where it is for the dollar. The US dollar is fragile relative to its starting point, and that's helping the Aussie against the US at least.
Sean, what do we look for in the euro? Because the EU hoping to agree on this US tariff deal in coming days, and President Trump saying, look, they've been very nice to us now after being not so nice.
Yeah, I was surprised to hear that. So they've played this game for a while, I suppose, and they're using whatever tactics that they can. I would have thought it was going to be quite difficult to reach an agreement in a number of sectors. The US particularly hostile on car imports, and agriculture is always a very thorny issue for any country when it comes to tariff negotiations. So I'm a bit surprised to see that. So look, if the Eurozone can get out with, say, maybe just a few sectoral tariffs here and there that are higher than 10% or so, but the baseline 10 or in that range, then I think that's a pretty good outcome for them, and they would be very relieved at that stage. And essentially the longer you go without one of those letters being posted on Truth Social, the better it is for you.
Oh, what a complicated world we live in. We find ourselves here. Truth Social, right. So when it comes to Trump and the tariffs, I mean, stocks, equities today shrugged off that threat. How does it play out in terms of the Aussie being a proxy for the Chinese economy? I mean, like, where does that story sort of end with the Aussie?
Yeah, I think as I was saying before, the weakness in the US dollar has helped the Aussie reach some of the highs since November, although the 66-cent area is proving very difficult. But if you look at it against a range of currencies, year to date, it's actually one of the worst performers of the major currencies in the world. So whether you take it from January or from Liberation Day in April, it's underperformed on many crosses, and I think a lot of you've got a lot of viewers who are tempted to go to Europe right about now and finding that their Aussie doesn't get very far there, it doesn't get very far in the UK, and even the Japanese yen, it's off its highest levels there. So it's underperformed, and the speculative positioning is also bearish. So I think it does look as though that while stock markets, they can trade off all sorts of things, and you've got lots of other guests who will cover that better than I can. In terms of the currency markets, I think that the Aussie is still suffering from an expectation that China will emerge battered from this. Not necessarily broken, and it's holding up okay in aggregate terms, but that it does remain sluggish, and so I think that spills over to the Aussie and probably remains under pressure on a lot of cross rates.
Great to have you back, Sean. Hope to see you again soon. Have a good rest of your trading day. Sean Kello, Senior FX at ITC Markets. Well, his trading day's over, as is everyone's,
I guess so. I wonder if Sean has to pay attention to Bitcoin these days. I'll ask him next time. We mentioned net wealth updating the market this morning and today. On the call, I spoke with Grady Wolf from Bell Direct and Howard Coleman from Team Invest about net wealth, which was stock of the day.
Weaker net flows, inflows obviously missing in forecast there, but the expectations are pretty high of a company like this. We've got three providers in the space. You've got Hub24, Net Wealth and Praemium. Net Wealth is the biggest of them all. Net Wealth and Hub24 are kind of neck and neck, and then Praemium's third. But when you're looking at it, they've got custodial funds under management of 111 billion. So that is a huge amount of money. And that exceeded consensus, the growth up to that amount. And then managed funds under administration grew 34%. So there has been a bit of a shift into net wealth from other providers or just from those who didn't previously use a platform.
It passes all our filters. So putting price aside, it's got a very high return on equity, which you'd expect. It's not a capital intensive business. Really, it's a technology business, which means it's capital light. Once they've developed the technology, yeah, there's a bit of tweaking, a bit of improvement, but it's not expensive. You wouldn't expect them to have any debt. They don't have any. And you'd expect earnings growing, and they are growing. So great business, but it's on an 85 PE ratio.
Market leaders today, let's take a look at those lifestyle communities picking itself up off the mat after being absolutely hammered earlier in the week. It's up by 8%. Of course, the brokers have weighed in. Liontown looking pretty good. Lavisa up by 5.4%. And we've got Morgan Stanley lifting its price target 11% for that one to $35 per share, rounding it out with Mesa Blast and Perseus Mining.
All right, let's have a look at the laggards today. Domino's Pizza just can't crack a break at the moment, can it? Down another 4.5%. Telix had a great session yesterday, coming off today. Net wealth we discussed on the call, and Ramsay Health down 3.3%.
Small to mid-cap space, there's some winners here, including Platinum Asset Management up by 12%, as we mentioned, 56 cents per share, and APM Animal Health up by 11%. We've actually got his interview with the CEO up on the website. You can go to the small cap section of the website and find it there.
All right, and the laggards in the small end of town, Imricor Medical Systems down 14%. We touched on that at the top of the show. MTM Critical Metals also weaker by around 9%, and a bit of a weakness in some of the lithium players like Delta and European.
It's a Thursday, so we get the weekly jobless claims report coming out in the United States. It will be the focus of the market. That's really the only economic data that gets released, but we will hear from a few Fed speakers. We've got Waller, Daly and Muslim as well from the St. Louis Fed expected to speak.
All right, and tomorrow, it's a Friday, not much happens in this part of the world on a Friday, does it? We're here, Business New Zealand Manufacturing Index and the RBNZ, statement of intent. Just recapping where the market has closed the session, up by around 0.6% on both the CBO 200 and the ASX 200. And as I mentioned, the ASX 200, which fell below its 20-day moving average earlier in the week, has crossed back above that. So up 50 points, 8,589.
Of course, we are on watch for any headlines or any Truth Social updates coming from the US president in terms of tariffs. And we will be watching Nvidia as well. Don't forget, we're on the cusp of US quarterly earnings season as well. So we do get sort of a drip feed of some of those companies as well early in the piece. So we'll be keeping our eye out for that. We'll get you across it in the morning.
See you then.